So I've been looking into Gevo for quite some time now. If you've been following my channel, you'll know that I've been getting into what I call conviction investing, and which I like to invest in causes that I believe in, namely climate change and technology to combat that. And I gotta say, Gevo is a very, very interesting stock. Let's talk about it. So I should start off by saying that this is a review in progress. I'm still looking into the company. I have not made a final decision one way or another, but I do have a dominant opinion. Gevo is a renewable chemicals and advanced biofuels company headquartered in Colorado. We're going to start with the bad first. Now, stay to the end before you click away or dislike that I say a lot of good things about this, but in order to get to that, we got to start with the bad. So Gevo has had quite the rough decade since it went public in 2011. Now, don't let these numbers fool you. The reason being is I know it looks like, the stock was worth $107,000, upwards of $150,000 per share, but that's because Gevo has had 3 reverse stock splits in its history. The first one was a 1 for 15. There was another one for 1 for 20, and then there was a third one also for 1 for 20. Now, you can pause this if you want to and read this. But the thing I want to show you is that if you had invested $10,000 into Gevo when it went public in 2011, as of right now, you would have 55 cents. After all the splits and everything, you would have 55 cents. So at its height, on a non-split adjusted basis, I did the math and I think I got $25. That was the high point of this stock. So what I've read so far, and I still have more reading to do on this when I continue researching it, is that since it went public in 2011, there were a lot of shortcomings with this. First of all, the promise of converting biomass into, renewable biofuels, liquid biofuels, that was a lot harder than it had led on to be. And there were lots of technical issues. From what I read earlier, there were some intellectual property disputes, some legal issues. And then, even more importantly, there was also the price of oil that had become cheaper, more financially attractive than biofuel. So with the combination of technical challenges, financial issues, oil becoming more financially attractive than biofuel, intellectual property disputes, Gevo's stock crashed several times. As I continued looking into it through the finances and stuff, I found myself wondering, what is the hype with this stock? Like, what is great about this? I mean, it got to a height of 32.8 million in 2018, and then it was downhill from there. It's just a history of bleeding money. What is the hype with this stock? And to be perfectly honest, I was about to write this stock off, but then I saw some things that made me change my mind. So this is where it starts. If you are a repeat visitor to my channel, you know how I love balance sheets. They tell the story of the company's liquidity. They tell a lot of things. This balance sheet, this assets to liabilities ratio is absolutely phenomenal. Over the years, look at this. Look at the assets. Look at the liabilities. Look at this. Am I the only one that's excited here? I don't know what the ratio of assets liabilities that is. I don't even know. Because if I find out, I'm going to give myself a heart attack. Look at the debt. Like, over the years, they've been aggressively paying down that debt. Right now, as of last year, 1.2 million, that's it. Down from 19.2 million in 2017. This is a company that's turning itself around. Take a look at the assets. Most of that is cash. Oh my God. Like, okay, this is interesting. So if the company wanted to, if it really wanted to, it could instantly get rid of that minuscule amount of debt instantly, just with this cash alone. That balance sheet was enough for me to keep digging into the company even more. And boy, did I like what I saw. What I want to bring your attention to is this right here. Over 1.5 billion in take-or-pay contracts already in place. So Gevo isn't just fishing for customers. Well, I'm sure it is, just like all companies are doing. But Gevo already has customers in lock. Already has pre-orders. We'll talk about that in a second. And in addition to that, an additional $6 billion, roughly $6 billion, is on the table. So what take or pay means is that as long as Gevo holds up their end of the bargain, the customers that have entered the contract, even if they decide not to take any of the not to honor their part of the contract, they still agree to pay to some amount of that contract. So no matter what happens, as long as Gevo holds up their end of the contract, they will still get revenue of some kind from these customers. And from what I read so far, I have no reason to believe that these customers are going to pull out of the agreement. And these are some big name customers too. Now I'm reading this from their latest 10K. If you're looking at this company, I highly recommend you do your full research before committing to anything. Read through the 10K, read through any 10Qs, look through it, watch any interviews, check out the CEO, do your full research before deciding to commit or not to commit to any of this. But there are some big name customers. We're talking Delta Airlines, Air Total. We're talking Scandinavian Airlines. Like, these are some big name customers putting some big name money towards this. Now, one thing you will note is that this contract is expected to mature once Gevo meets their end of the bargain, which is supposed to happen in 2024 for all these. What that means is this revenue is dependent on Gevo meeting that contract, and it has until 2024 to do so. And what that also means is that it'll be 2024, as long as things go well, before we see some major revenue, as far as I can tell. Now, this is dependent on something called Project Net Zero, and what that is, to put things very simply, is they are building an off-the-grid renewable hydrocarbon plant, which will be used to create the fuels that, to meet the demands of these contracts. Now, this project for Net Zero is expected to close first half of 2020, and is expected to go into production in 2024. It is fully funded, according to this PDF. So there should be no problems as long as they don't screw it up. As long as they don't screw it up, they should be in the money in 2024. Now, one thing that my Hyliion viewers may be interested in is this right here. They also have a project for renewable natural gas. That has, from the latest news that I read, that has already begun. That is expected to go into production in 2022. A lot of what Gevo is using this for is to power the hydrogen carbon plant, but who knows? There might be an opportunity down the line for maybe an agreement between Gevo and Hyliion. Now, that is all speculation, but possible. So in this picture here, now this is a little difficult to understand, but basically it shows how Gevo can make this fuel, the fuel that they're making, both attractive to the customer and profitable for the company. They're basically taking the carbon value, which is credits, tax credits, advanced fuels credits, basically different kinds of credits that the government is giving them, and dividing it out, splitting it out between the customer and the company. So customer gets the share of the value, and it makes the price cheaper for the customer. Gevo takes a share of the value, and it bumps up the revenue applicable to the company. So Gevo has been a very interesting company for me to look into. And like I said, I'm not done looking into it just yet, but so far I'm seeing a lot of upside. Like, it's had a very rough decade, but it seems like as long as it's, as long as they got their act together, that their worst days are behind it. So far I'm seeing mostly upside in this company, but there are some things we got to watch out for. The first thing is that you're paying now for something that's going to happen in 2024. Now, all the contracts are in place. Everything is set. Gevo just needs to hold up their end of the bargain and actually build it and not have any delays in production, which, if there are delays, that's going to be a problem. But you are essentially paying for something that you're going to get the benefits of a few years down the line. Now, that's not a huge problem for me. I already have a stock like that, and that's Hyliion. But I already have one spec stock. I don't know if I want to have a second one. So I guess the question is Gevo a spec stock for me? Another thing is that we still have to deal with the revenue capabilities of today. They've had a massive drop in revenue from 2019 to 2020, primarily as a result of their drop in ethanol sales. Now, the reason for that is easily explained. Basically, and you can pause this and read it if you want to, their Laverna facility, I don't know if I'm pronouncing that right, it got shut down due to COVID. And that was their primary moneymaker for the last couple of years. That got shut down in March 2020, and to this day, it is still shut down. I mean, that was a lot of their revenue. And currently, the Southampton facility is also not producing premium gasoline or jet fuel. Now, that is expected to change, at least for the Southampton facility, sometime this year. But we'll have to see. We'll have to see how that shakes out. Now, they are currently in a contract with the city of Seattle since 2019 for a 4-year contract with 3 2-year extensions to supply a bunch of renewable fuel to the city. So there is that. So right now, Gevo is trading at $6.78. I don't know yet because I have a lot more research to do. I don't know yet if that's a good price to buy in on. According to these valuations, they are not. But I mean, that's not the end of the tale for me. Keep in mind, I'm not paying people that are buying into the stock now are not buying into the stock for right now. They're buying into the stock for like 4 years down the line. So I need to keep that in mind when thinking about this stock at this price. Anyways, take care, have a great day, and eat your vegetables.